Namaste. In this video, we will discuss about IND AS 19 that talks about employees benefits. Objective of IND AS 19 is to prescribe accounting and disclosure requirements for employee benefits. Here we need to understand the terminology employee that is not defined under IND AS 19. But the wide range of services provided by employees is covered by this terminology of employee. Para 7 of IND AS 19 says that any services to an entity on full-time, part-time, permanent, casual or temporary basis will be covered under the terminology of employee. So it means that directors and other management personnels and casual employees and temporary employees will be also covered by definition of employee. The terminology of employee is too much important here because whatever are the obligations related to employees will be covered by IND AS 19 and obligations related to other than employees will be covered by IND AS 37, that is provisions, contingent liabilities and contingent assets. So we need to first classify whether the obligation is related to employee or other than employees. If it is related to employee, then IND AS 19 will be applied. If it is not related to employees, in that case, IND AS 37 will be applied. So all the employees benefit will be covered by IND AS 19. Apart from those are covered by IND AS 102, share-based payment, and accounting and reporting by employee benefit plans is not covered by IND AS 19. Employee benefits covers all type of consideration provided by an entity to the employee in lieu of the services that has been provided by the employee. Apart from it, it includes the termination benefit provided by an entity to the employee at the time of termination of the services of an employee. For the purpose of bifurcation, we can divide the employees benefit in 4 categories. First is the short-term employees benefit, another is post-employment benefits, third is other long-term benefits, and last one is termination benefits. Short-term benefits cover the obligations those are expected to be settled within a period of 12 months after the end of annual reporting period. Short-term benefits covers the wages, salaries, paid leaves, profit sharing and bonuses, those are provided to the employees, medical care, house, cars and other free subsidized goods. So whatever the obligations related to employees benefit is expected to be settled within a period of 12 months will be classified as short-term employee benefit. Post-employment benefit will cover the retirement benefits like pensions, lump sum payment paid at the time of the retirement, life insurance, and post-employment medical care, etc. Other long-term benefits covers the long leaves, sabbaticals, jubilee, or other long-term services benefits or disability benefits. Termination benefits results of terminating an employee before the retirement. It may be voluntary or otherwise. So this is what the broad category of employee benefits is. Under short-term employees benefit category, we classify those benefits those are expected to be settled within a period of 12 months from the end of reporting period in which services are delivered by the employees. But if there is any change and that change is of temporary nature in settlement, so in that case we are not supposed to reclassify the category of employee benefit from short-term employees benefit category. But in case that settlement plan is of permanent nature or if there is any change in the characteristics of the benefit offered by an entity, for example, the non-accumulating benefits are converted to accumulated benefits. In that case, we are supposed to review and reclassify the employees benefit category. So it is to be done in two cases where there is a change in the settlement plan and that settlement plan change is of permanent nature. And if there is a change in the characteristic of the benefit, in that case we need to review and reclassify the employee's benefit category accordingly. While doing the accounting of short-term employees benefit, we are supposed to recognize the liability for the unpaid amount, and for the excess amount that we have paid, we will recognize it as a prepaid. And in PL side, we will recognize expense unless any other IND AS requires that short-term employees benefit cost to be added in the cost of asset. One of the form of short-term employees benefit are the paid leaves. These can be of accumulating in nature. It means that it can be carry forward if not used in the current financial year. So we can divide the accumulating leaves into categories. One is the vesting leaves, where employee is entitled for the cash payment if it has not availed all the leaves. So it will get the cash at the time of leaving the company or at the time of the retirement from the entity. And another form can be of non-vesting, where employee is not entitled for the cash payment, but it can use the carry forward leaves in the next financial years. So in both of these cases, we need to measure the expected cost of these leaves and need to account for accordingly. Another form of short-term paid leaves is non-accumulating, where these leaves got lapsed if not utilized within that financial year. So in this case, no liability or expense is recognized until the time of the absence actually occurs. Entities provides the employee benefits in form of bonuses or sharing profits. In this case, we need to recognize the obligation where there is present obligation. It means that entity has legal obligation or constructive obligation by way of its previous practices, and it does not have any option other than to pay to the employees. And reliable estimation of the obligation can be made. Reliable estimation we can judge based on the if there is formula for determination of the amount of benefit that we need to pay to the employees, and we can determine the amount and it has been approved for payment before the financial statements are approved, and there is a past practice that indicate of constructive obligation. In this case, if we do not pay to the employees, there may be risk of deteriorating the relationship of employees and employer, and some employees might leave the organization and that employer does not want. So in that case, we can define that it is a present obligation, and if both the conditions are satisfied, that it is present obligation and reliable estimation can be paid, we need to book it in profit and loss account, not in OCI. And if it is not settled within a period of 12 months, we need to reclassify it as a long-term employees benefit. If we talk about the disclosures, there is no specific disclosure for short-term employees benefit under IND AS 19, but IND AS 24 require disclosure for employee benefit for key employees, key management personnel, and IND AS 1 require disclosure of employee benefit expenses. Post-employment benefits can be classified in two categories. One is defined contribution plan and another is defined benefit plan. In respect of the obligation, in defined contribution plan, obligation of an entity is limited to the amount of the contribution. However, in defined benefit plan, the obligation is up to the amount of benefit payable to employee, irrespective of the amount of the contribution, whether it is lesser or higher. In defined contribution plan, risk of actuarial and investments lies with the employee, while in defined benefit plan, it lies with the entity. In respect of the accounting is simpler in case of defined contribution plan, while a little bit complexity is there in defined benefit plan because of lot of actuarial assumptions and discounting factors, etc. There is no actuarial assumption in case of contribution plan, and it is there in defined benefit plan. There is no discounting factors in contribution plan, however it is there in defined benefit plan. So these are the major differences between defined contribution plan and defined benefit plans. Entity to fulfill its obligation in respect of employees' benefit participate in different types of plans. It may be multi-employer plan, group administrative plan. This is created to lower the admin or investment management cost. And another may be risk sharing plans, estate plans, and insurance policies. In case of multi-employer and group administrative plans, there is a pool of assets by various entities. In case of risk sharing, it is pool of assets by parent and subsidiary companies. Estate plans are established by the legalization, and in case of insurance policy, it is taken by the entity to fulfill its obligation in respect of employees' benefit, and premium is paid. From point of view of control, multi-employer and group administrative plans are not having common control. In case of risk sharing, it is having common control because it is created by parent and subsidiary companies, and estate plans are always independent. In case of benefits, in case of multi-employer plan, benefit to the employee is decided irrespective of the identity of the entity. And in case of group administrative plans, benefit is decided based on the entity specific, because this plan is created just to lower the admin and investment management cost. So in multi-employer plan, it provides benefit to the employees irrespective of the identity of the entity. But in case of group administrative, it is provided entity specific. And in case of estate plans, it is covering the specific types of category of the employees. Classification of these plans is done based on the obligation of the entities. So based on the obligation, it is defined whether it is defined benefit plan or defined obligation plan. Apart from it, if entity is participating in multi-employer plan and if sufficient information is not available for allocation, etc., then it will classify it as a defined contribution plan. And in case of risk sharing, if there is a policy and agreement available for allocation of cost, we need to follow that. If there is no policy or agreement in that respect, we need to recognize it in separate financial statement of sponsoring entity, and other entities will recognize cost equal to the contribution payable. Accounting for defined contribution plan is simpler because there is no actuarial assumption, there is no possibility of actual gain or loss, and there is no discounting except for the long term. And we will recognize liability or expense for the amount payable for financial year. We will recognize prepaid for the amount that is excess paid during the year, and we will recognize cost of asset if it is allowed as per other IND AS, maybe 2 or 16, etc. As compared to defined contribution plan, accounting of defined benefit plan is little bit complex because it contains the actual assumptions. There is always possibility of actual gain and loss, and obligation is measured on discounting basis. So the plan may be unfunded, it may be wholly funded, or maybe partially funded by employees and the entity to a separate fund that is legally separate. In these cases, the payment to fund depends on the financial position of the fund, investment performance, and entity's ability or willingness to pay the fund. So in these cases, as the payment to the fund depend on these three factors, the expense recognized in the books does not necessarily the same as we have contributed to the fund or amount due to contribution to the fund for that period. Because if there is a better returns on the fund, the contribution payable to the fund will be lesser, but the amount of obligation will be different. So there may be difference between the expense recognized in the books and amount due to the payment for the fund. Accounting of defined benefit plan is dependent on 4 models. First is determine deficit and surplus. In this, we need to reliably estimate the unit cost of the employee services that he has earned in current and past years. We need to use the projected unit cost method to reliably estimate the cost to the entity, and we need to discount it. At the time of discounting, there may be cases where the benefits are going to be paid in next 12 months, but as a principle we will discount it as a whole. And we need to determine how much benefit is attributable to current and past years, and in some cases employees might be getting the higher amount of benefit in later years. For this purpose, we need to estimate it and allocate it on a straight line basis. While estimating, we need to consider the conditional benefits and the probability that employee will fulfill those conditions. So we will include it at the time of reliable estimation of the obligation. Apart from it, we need to make the actuarial assumptions, maybe of demographic and financial nature. These actuarial assumptions should be unbiased, means they should be neither prudent, imprudent, or nor excessively conservative. Apart from it, it should be compatible, should reflect the economic relationship between inflation, salary increase, and other factors. Those are going to play a major role in defining the obligation to the entity. Demographic assumptions may be mortality rate, attrition rate, disability or early retirement of the employees, and in financial assumptions may be discount rate determined with reference to market yield rate on government bonds, or where there is no INR, there is a different currency, so we will consider the bond if deep market is available. If deep market is not available, we will use the market rate. And other benefits we will consider, like salary increase, medical benefits, and other future medical costs, and tax payable by plan on contribution. These are some actual assumptions we need to take care at the time of estimating the obligation. Apart from this, we need to discount the amount of benefit to determine present value of defined benefit obligation and current service cost, and need to deduct the fair value of any plan asset from the present value of defined benefit obligation. Plan assets are the assets those are held by long-term employee welfare fund and other qualifying insurance policies. Those are issued by non-related party and can be used only to pay employee benefits under the plan, and these are not available to entities on creditors. And we will recognize the right to reimburse only when it is virtually certain, and we will recognize it as a separate asset. So this is first step. We need to determine the deficit and surplus. Second step is recognition in balance sheet. In first step, we have calculated present value of obligation as well as fair value of planned assets. So in this second step, we are going to compare both the things, present value of obligation and fair value of planned asset. In case obligation is greater than fair value of planned assets, so we will call it deficit, and we will recognize it as provision under non-current liabilities. In case the fair value of planned asset is higher than the present value of obligation, we will call it surplus, and we will recognize in balance sheet the least of the two below, surplus as computed above or asset ceiling. Asset ceiling is present value of economic benefit. Those are available in form of refund from the plan or reduction in future contribution to the plans. There may be case where employer has taken multiple plans, plan A or plan B, plan C, like this. So we will offset net defined benefits in plan A, plan B or C only if there is legal enforceable right available to settle it and intends to settle on net basis or realize surplus in plan A and settle obligation under plan B simultaneously. So if these two conditions are satisfied, we will be able to offset both the plans. Third step is recognition in profit and loss account. Recognition of defined benefit cost. It may be in form of service cost. It may be current service cost or past service cost. Past service cost may be because of the plan amendments, because there is any introduction or withdrawal or existing plan or change in the defined benefit plan. And there may be curtailment. Curtailment means that there is a significant reduction in the coverage of the employees. Those are covered by existing plan. And there may be settlement also. And settlement means that all the obligations have been eliminated. If there is a replacement of plan, for example, employees were covered under plan A, now they are covered under plan B. In that case, it is not called settlement. And gain or loss on settlement will be calculated by present value of obligation minus amount paid or assets transferred, etc. in this regard. Apart from it, there may be another cost of interest on defined benefit liabilities or assets. And when we are booking these costs, the general rule is to book to the P&L, and if there is a reassessment because of the curtailment or plan amendments, etc., we are supposed to book expense up to the date of reassessment calculated based on the opening balance, and need to calculate after reassessment on the balance of net liability or assets based on the discount rate that we have used for the reassessment. Apart from it, we are supposed to book all the cost as a expense. Few costs are not included in past service costs because these are related to actuarial assumptions and will be part of OCI, like impact on actuarial assumptions, actuarial gain or returns from the plan assets. Those have been already recognized in financial statements, and increase in vested interest. Those are not conditional on future employment. Fourth and last step of accounting of defined benefit plan is recognition in OCI. We will recognize in OCI all the actuarial gains and losses. Those have been occurred because of unexpected fluctuation of employee turnover ratio, retirement rate, mortality, increase in salary benefit, material cost, etc. So whatever are the gain and losses related to actuarial assumptions will be booked in OCI. Apart from it, return on plan assets, excluding the net interest on net defined benefit liability or assets, and change in effect of asset ceiling. Here also excluding the interest on net defined benefit and liability and assets will be booked as a part of OCI. Third category of employees benefit is other long-term employees benefit. It includes long-term paid absences, jubilee or other long-term services, and long-term disability. In case of long-term disability, if benefit depends on the length of the service, in that case obligation arises when the service is rendered. And in another case, the benefit is same irrespective of the length of the service. In that case, obligation arises when the events happen. Apart from it, other long-term benefits may be profit sharing and bonuses and deferred remuneration. In case of estimating other long-term employees benefit, we are supposed to consider probability and length of the time apart from other factors, and the accounting in this case is similar to the post-employment benefits. Fourth category of employee benefits is termination benefit. So termination benefits arise when employee accepts the offer of termination from the entity or entity decides to terminate the employees. So in both of these cases, payable will be recognized in books of accounts at the earlier, the date when entity can no longer withdraw the benefits that it has offered to the employees, because either employees have accepted the offers or restriction to withdraw the offer takes place, or the date when entity recognizes cost for restructuring which involve payment for termination benefits. So whatever date is the earlier, it will be booked as a payable in books of accounts and expense will be recognized accordingly. Apart from it, the recognition measurement criteria is similar to the settlement plan that we have discussed earlier. If it is an enhancement to the post-employment benefit, termination benefits provides enhancement to post-employment benefit. In that case, it will be treated as post-employment benefits. If we expect that these benefits will be settled within 12 months, it will be booked as a short-term employee benefit. And if we expect that it will not wholly settle within 12 months, in that case, we will treat it as other long-term employee benefit, and accounting will be according to the similar plan that we have discussed in previous slides. So this is all about the summary of AS 19 employees benefit. If you have any question, need any clarification or want to discuss about it in detail, you may contact on the WhatsApp number given on the screen. Thank you. Namaste.